Good afternoon and welcome everyone to the Ultimate Trading Webinar for Beginners. My name is Danny and I will give you the webinar today. What we're going to do is we're going to open the webinar, as I said, with the introduction to this facility, which is called the Web Trader, and to the company itself. AvaTrade is in the market for almost 2 decades, since 2006. We have 9 licenses worldwide. As you can see, currently we have this interface to Web Trader, and if you got any question or query along the way, our customer service can be found right here at the bottom left. So you can either chat with us or you can send us a WhatsApp, whatever you prefer, or if you're using a different interface, you can directly send us an email to cs@avatrade.com. What if you have a question regarding trading or risk money management or anything under the trading subject, in fact? So you can have a senior account manager to give you full support through the process. This service doesn't cost anything extra and doesn't obligate in any way. So I suggest whoever doesn't have a senior account manager yet, contact customer service, and depending on your eligibility, you will be assigned with one, which, like I said, can give you full support through the process, assist with risk money management, analysis, basically everything under the trading umbrella. So we're going to carry on with the Web Trader, as I said, which is embedded in the website. Although we're looking at the desktop version, we do have the AvaTrade's trading app, which is the mobile app. It does look a bit different, since in a computer and in the phone, usually things doesn't look the same, but the features that we have here, these various features, can be accessible via on the app as well. Okay, so we're also going to mention the other platforms just so we will know what we have. And I'm also going to add that the MetaTrader 4 and MetaTrader 5 also interacts with the Web Trader, which allows, for instance, if I like the analysis in here and I want to execute the positions or on MT4 or vice versa, maybe I want to use the facility here to do the analysis or whatever I want. So I can then go to my MT4 or MT5 account and continue from there. I can modify the positions, I can open positions, and this can be very, very useful. All right, on top of that, as we said, Ava futures and Ava options, and lastly Ava social, which I'm going to say a few words about. And the reason is, since this is a webinar for beginners, as a beginner, I'm not always sure what my strategy is going to be, how I'm going to trade, what I'm going to trade. So Ava Social offers copy trading. Copy trading means that I can literally link my account to another trader, and then I will automatically trade according to that trader. Just amazing. The app itself is download for free, so I suggest you'll give it a try. There is no reason not to. And this is, even though I specified now that this could be useful for beginners, it doesn't mean the intermediate or advanced pro traders cannot enjoy copy trading. Copy trading can be very beneficial and a huge time saver if you do the proper choice. So I do suggest you'll do a little bit of research before you're selecting who you do the copy trading, and just explore the app. Okay, so we're going to carry on with ease with the Web Trader, which we're going to explain a little bit about the menus to the left. As you can see, what we have at the top is 3 lines. In here, basically, I'm going to find my personal information about my details or my account, underneath which I can also make deposits and withdrawals. In here, I have trade. This is where we are. In here, we've got positions, so I can modify whatever positions I've got. Orders, okay. History, also great. I can define what range I want to be displayed in here by the date or by here. Signals, Signals is something that we can access via two ways. One is through the signal section itself. The other way is from outside. So if I'll click on the Ava trade and I'm right back to the default screen, we can see that in this list, we've got this blue lightning icon. And if I'll click on this blue lightning icon, what will happen is this signal will be opened. Okay. However, as we can see, the production date, which is displayed here at the top, will only be revealed if I'll click signal by signal. But if I do it from the signal section, we can see that it's from the newest to the oldest. You're probably asking yourself, what is the advantage taking a signal that was just analyzed or a signal that was analyzed 4 or 5 hours ago? Well, since the market is alive and the market is moving up and down, naturally, the analysis that is done on the signal can already be fulfilled. We're going to take a healthy signal now, but we're going to make a comparison to a signal that was no longer useful, and we will see what is the difference. So we can see that at the top we've got S&P. We're going to click on S&P to open the. We're going to click in here. Just a second, guys. We're going to see the click here on view signal to see the analysis. There are a couple of things here. The green lines, it says resistance, and here it says support, the red lines. Okay, great. We're also going to match the validity to what's displayed on the analysis chart. So in here it says daily, but in here for us at the top, it says 1M. 1M is 1 minute. So we can't see the same levels in here. What we need to do is click on the toggle, scroll it down, click on 1D, and now we're looking at the same time frame, and we can click and squeeze it down like that. Now, I could place the same levels as in here by drawing those lines and, you know, adding this layer of analysis and doing my own analysis. Okay, but if I want to just use the signal as they are, what I can do is just click here on view signal as we did. Then I choose what scenario makes sense to me. We've got here buy and sell scenario, and then hit the buy button, and we are basically good to go. Yeah, we've got take profit and stop loss placed for us. Okay, but what exactly do we get from that? Well, the way that it works is very, very simple. We've got here 3 boxes: execute when price hits, take profit, and stop loss. All those 3 boxes are basically activated automatically when the market is reaching the price that we design. Okay, so take profit is closing the position automatically with a profit when reaching the designed price. Great. What about the stop loss? So the stop loss does the same similar thing, but with a loss. Okay, with a loss. How is this helpful again? The answer is because this happened automatically. And this was also placed for me automatically, right? You guys saw that I didn't do anything in here, right? Let me show you again. All I did is I clicked on view signal. Then again, I choose the scenario that I want, and we are good to go. This is placed for us. Based on what? Based on what we saw outside. So if we click on view signal again and we see the levels that we've got for the take profit and the stop loss, we see that the reference, just a second. We can see that the reference for the take profit and the stop loss is obviously the reference from the support, from the resistance and support. And this is how we've got those levels. Of course, that on top of that, if I would want to modify something, let's say I want to modify any of the specs that we have here, the numbers we've got in here, I can do that, but I definitely don't have to. I can keep it like this with the analysis and just launch the signal in 3 clicks away. we're going to look at another signal. We're going to look at another signal down the road. As we see, we've got some signals with no stop loss and take profit. There is no number in here. And why is that? If we look at Euro USD as an example, Euro USD, we're going to click, same thing. We're going to click on the signals, expand the chart, match the validity is already days, perfect. And then we're going to select the scenario. Okay, let's maybe go with a buy. But there is this message displayed in here. The market has already reached a key level. That means that the analysis that was done in here already happened. And if we'll try to use the signal, so let's try, we don't get the take profit and the stop loss as we had with S&P. Okay, we don't have that. Why? Because the levels that was here in the analysis already happened, which makes this signal futile. A very common question is, Danny, when are we going to get a signal for Euro USD again if this one is expired? Unfortunately, guys, there is no specific way to know. There is no way to range that. The only thing that we can do is come back to the section again, or an easier way is, I'm going to show it to you from the outside. Let's suppose that we're here and we would like to know if the instrument that we're usually trading has a signal or not. So one way is go to the signal section like this and search in the categories. So that means going to Forex, finding Euro USD, here it is. But if it's another currency that is here down the list, and I don't want to start searching down the list because it's very time consuming. How can I right away know if the signal that I'm trading has a signal or not? Basically, this is very, very easy to know, but please pay good attention to what I'm going to show you. The way that we can do it is right here at the search button. By the way, I'm back to the default screen by clicking on the icon here. And then I'm going to go Euro USD, just like that, click it. And we see that it has a signal, but okay, so we'll have to either refresh this or go back to the signal section, okay? All right, if there are any questions about what I've explained so far, guys, any questions? I forgot to ask about Ava Social, but never mind, guys. If there are any questions until this point, feel free to write the questions. So, and I'm seeing all the questions, I promise you. Okay, down the road, we've got so what we saw, also one more thing to say that it's quite important to mention. The signals are not manufactured by Evitrade, they are manufactured by the third-party vendor, the Trading Central. Now, what we saw in here, this is under the umbrella of technical analysis. So when we're doing analysis for any instrument, oh, sorry, we did have that, okay? And when we're doing analysis, there are two types of analysis, okay? Some may say there are more, but I claim there are main two. So types of analysis are technical analysis and fundamental analysis, okay? The way that it works is very simple. So we've got statistics, averages, levels of support and resistance. So this will be the how things are moving. And then from the other end, we've got news, articles, we've got decisions, and we've got all kind of things that this will be the why. So if we know why things are moving, I'll give you an example. So things are very fluctuative. Why? Because Trump says something about the tariffs. Okay, just as an example, things are very fluctuative. Why? Because there is a situation in the Middle East that is causing all kind of things. Okay, so this kind of things, we always have the how, which is the statistics, and we can use indicators to sum that. We can use all kind of ways to analyze the how things are moving. Okay, as I jot down here, and we've got the why. Why is actually the reason. It's actually the reason governmental decisions, interest rate decisions, also, as we said, wars, God forbid, things like that. So this will have direct impact on what? Right on the market and the economies. So if we can combine both of those, the how and the why, sometimes it helps optimize the analysis, finding a better entry, and so on and so on. Okay, why did I tell you that? Because the signals from what we notice here is technical analysis, right? We've got support and resistance, we've got the take profit and the stop loss. Excellent. What about the reason that it's moving? Okay, so the news can be found in the news section right underneath. And in here in the pre-European market brief, we can see that at the bottom of this article, we've got 4 related instruments. And these 4 related instruments are actually things that I can trade if I'll go through the article in here, right? We can see that there are various categories in here, similarly to what we saw in the beginning. Underneath, in this globe icon, we've got analyst's view, analyst's views, market buzz, forex features, ideas, economic calendar, and trading calculator. If we'll focus on the market buzz, which I like to show, we can see that there are circles here, those bubbles right here, that could also be displayed as a list if we click on the table. Okay, but if we keep it like this, we have the open door right in the middle with the most mentions. This means that this is the at least from the analysis that was done in here, this is the most popular thing that we can see here online. So if we click here on open door technologies, we've got several parameters in here we can find. We've got the open door CEO wants to make the most meme stock moment. Okay, something maybe fun to read. There are different topics in here, maybe the earning announcements, and then I can only get the earning announcements. There are different parameters in here. So this is a very, very useful features we have. And the second thing that I'm going to show you is the economic calendar. So what we saw is basically public company news, right? We saw that it was open door was an example of many things that we saw there. And in the economic calendar, we can find governmental decisions. So I'm going to show you at the moment, if you, by the way, if the economic calendar looks like this, what we want to do is we want to see what date is selected. And the reason that it's like that is because we are on the 6th. And on the 6th, that there are no events, right? So if we click on the 6th and then on the 13th to have the trail, we can now see the event. However, it's important to know that what we see now is everything. Okay, we see, oh sorry, we only see China and US, right? So this is still filtered. We're gonna click on the reset. Okay, now we see everything. Okay, now we see Australia, we see Japan, see Ireland, we see all kind of things in here. Okay, but what if we don't want to see all of those things? We just want to see the dollar, because we're mainly trading the dollar and we're mainly trading the pound. Okay, and maybe also the ZAR. So we've got the ZAR, we've got the dollar, we've got the pound. Okay, great. Now, what we're going to see is we're going to see dollar news, ZAR news, and pound news. But still, we see that we get low impact events, medium impact events, and high impact events. Now, we can see that the way that the calendar is constructed is we've got the impact of how strongly we think that this will affect the market. If we go to the right, we've got the result. If we go to the right, we've got the forecast. And if we go all the way to the right, we've got the last result. So the previous result is actually something that can help us give us a range of what to expect doing the analysis. Sorry, the previous is the previous result. Forecast is usually something that can be helpful giving us a range doing the analysis. I'm not saying that the actual will always be in the range of the forecast. Sometimes it's going to be more or less, but at least it gives us some direction of what we expect. Okay, now on top of that, we've had, I don't know if you noticed, let's unfilter the because I want to show you. Maybe we'll go back a little bit. There we are. So you see that what I did, by the way, is I selected from the 4th till the 13th. And why did I do it? Because I wanted to show you that there is this red line here, and you see results of events that already happened. So under the actual, in this column under the actual, we've got the results. And as you can see, the font here is a little darker. It's a little gray as compared to what the font that we see at the bottom in here, right? You see this is a little brighter white, and in here it's grayish. And we see that there are no results. This means that those events are new events. Those events already took place. Okay, let's bring it back to the 6th. Okay, and now with this in mind, so we've filtered everything that we wanted. You guys, of course, can even search here for a particular announcements if you are looking for. And in here to the right, the last thing that I'm going to say about the economic calendar, I know that you guys want me to begin the second part. I know everyone is waiting for that. But one last thing about the economic calendar is, as you can see in here, we've got five buttons in here, and we've got add to calendar. What does add to calendar does? It does exactly what it does. Add to calendar, and this allows me to add this event onto my calendar and to have a reminder of when this event taking place. I don't have to think when it's going to be and to prepare myself. I've got a reminder. I can just go to the computer, look at the result, do the analysis. I think it's terrific. So I highly recommend you guys to use it. Again, it's free, so why not? Okay, now we can finally begin the second part, the practical part. I'm just going to take 10 seconds break, and then guys, we can carry on with ease and begin the second segment. Thank you very much. All right, so we are back, and we can begin the second segment, the practical part. And for that, we're going to go to commodities, and then we're going to go to agriculture, and select maybe coffee. Okay. And then what we're going to do is click on the arrow here to expand the chart, and we're going to change the time frame from 1 minute to maybe weeks. And click here and scroll down. Maybe scroll down again, click and scroll down. Okay. Yeah. All right, great. So from what we can see, those are weeks. What does that mean? It means that if I look in here, it says coffee. By the way, I can change to whatever other instrument I want just by typing it and clicking it from the list. And okay, and right here, if I go to the right, we've got the W1. W1, it means that every candle on the chart is 1 week. Great. If I keep going to the right, we've got here arrows, bars, and line. What difference does it make? This kind of difference. If you pay attention to the oval that I've drawn, we've got two ovals at two different places on the chart, and I'm going to magically make those lines disappear. Okay, if I switch from candles to line, those lines are no more. And those lines can be imperative doing the analysis, since those hammer candles are a reversal that occurred. You probably wonder how we've got two hammers with almost the same size, one green and one red. And they do look quite similar. The reason for a candle to be red or the reason for a candle to be green is solely and only the result being higher or lower than the beginning. In other words, if I'll click on the arrow here, select the crosshair, point on the candle, we see that the open is 366, close is 359. It's lower, which makes it red. In here, if we point here, the open is 319, close is 290. Okay, sorry, close is 330, which is higher. So again, this candle has begun in here. Okay, it began going up, then it went down considerably, but it eventually ended up in here. Okay, in here it was vice versa. The candle started, went down, went a little higher, and closed higher than the beginning. So this, as you can see, it's difficult to see, but it was a little bit higher than what it closed. Okay, never mind. Let's focus on the area in here. This example helped me to show you the differences in candlesticks and how to enable the crosshair. If we keep going to the right, we can change the layout, have multiple charts. If we keep going to the right, we have here indicators. We're going to use it anyways. There is no point delaying about it now. If we keep going all the way to the right, next to the buy and the sell, there is this tiny arrow. If we click it, we have this nice list with all kind of things that can be helpful doing the analysis. Now, if, for instance, we think that this consolidation area that we're seeing can be, can be helpful. So how can this be helpful, the situation that we're seeing? Because if I'll be honest, as you can see, I'll zoom in a little bit. Okay, we can see all of those weeks. At no point since June, at no point coffee has exceeded those boundaries. Maybe a little bit down like that. 277 and 309. Maybe we can pull, yeah, almost. Let's make it a flat 310. Yeah. Okay. Now, there was no, since June, there was no point when coffee was exceeded those levels, 310 or 277. Okay, it kept consolidating around those levels. Now, what if I would like to design a position based on that? Because at the moment, if an instrument is consolidating like that, or the same as we can see here, this is the same, it's the same size, same momentum. As we can see in here, there was a break, but we can see that it's around the same proportions, okay? So how can we take advantage of that? We can assume at the moment, since it's in consolidation area, okay, that if something fundamental will happen, it's either gonna break up or it's gonna break down, but it can stay in this area forever. Yeah. So sometimes what I want to do to take advantage of what's happening here is to set, because in here, let's also emphasize something important. We are, if we see between 310 and 277, we are, I wouldn't say exactly in the middle. Yeah, we're not in the middle, but we are close to the middle. So to grasp, let's put a rectangle in here just to understand a bit better what's happening here. So let's suppose, okay, that we at the moment we are thinking to take a buy. Yeah, we're going to click here on buy, and we are thinking to take a buy. Great. When we take a buy, our intention is that the instrument's value will increase. So we're going to erase all those nice things we wrote down. Okay, and now we have we can get to work. So the current price is 295. Okay, we are thinking about the entry, then take profit, then stop loss. Okay, great. Now obviously the rectangle in the green supposed to emphasize the profit area, the rectangle in red supposed to show the loss area, right? If this would have been a sell, it could have been the other way around. Guys, I see that a lot of people clicking on the icon to raise your hand. You don't have to do that. This is a webinar, a live webinar. As I said in the beginning, the question section is all yours. You can write any questions you want. You don't have to wait for me to give you permission, right? I see everything, I promise you. So at the moment, if we want to carry on with the position, I understand that this area, this green area, I want it to be bigger, okay? I don't want to take a position in the middle and then to grasp this, the difference between 296 to 310, yeah? What I want to do instead is I'd rather wait for coffee to reach the same level that it turned around from, then take the position from here, okay, and actually take a sell and close it around here, and my stop loss will be placed based on the resistance, okay. This way, as you can see, my green area is almost as double as it was the other way around. So I'm going to switch to sell, and I'm going to hope for a reversal. And I'm also going to click on the execute when price hits, which is something we haven't mentioned until now. We've learned to take profit, close the position with the profit automatically, and stop loss is stopping the position automatically with a loss. But what does execute when price hits? It does exactly what it says that it does. It execute when the price hits, okay? Means opening a position when reaching the designed price. Okay, great. So now I can set, let's say, for instance, I can set 300 to be my trigger. So we're gonna paint it in white. Maybe I'll make it even 305. Okay, and that means but that whenever it will get to 305, it will open a position at 305. Great. And then we can sell. And then we can sell from here. Okay, we'll make the green area a little smaller like that. Okay, and we'll see the stop loss where we're going to place it very soon. Okay, this means if it's 305, I think to close it at, hold on. I think 285 makes sense. Yeah, 285 does make sense. Actually, because it already turned around a couple of times around that area, and I still want to give my position room to maneuver, maybe I'll push it up a bit and make it 290. And the 300, 305, I'll make it 300 like that. And there we are. Now I feel a little bit safer. Okay. So let's also set the number. So we've got the entry 305, close is 290. Okay, great. We'll also change the lot size to 0.01 because we can always increase if we would want. And we'll take the same proportions the other way. So we'll make it 315, which is above the resistance, which is in here. Great. We'll also extend the red area to fit to what we've placed. And this is just wonderful. So we've got those levels. The entry that we changed to was 300, and the stop loss should have been 310, and here we are. I could just as much make the other line red, but never mind. We'll flatten that out and does the same thing. Okay, great. So we've got a loss area, we've got profit area, we've got those levels. Excellent. How we can validate that those levels that we see are realistic and it's not levels that will take too long to get to. The first evidence is, of course, we see that those levels happened last week. When before that? The week before. And when before that? The week before also. And the week before that also. And the week before that also. So we're talking about 1, 2, 3, 4, 5, 6, 7 weeks. Roughly, maybe we can make it a 6. So a month and a half, during every week, those levels took place. So I'm not worried that it will trigger. Not a tiny bit. What else I can do is I can also add an indicator. Click on FX indicator, search for AVE for average true range, click and drag it to the right. Now I can even select the number of candles that I want to analyze and make an average from. So if, for instance, I'm going to go for the 6 that we saw, so this is 6 candle, 1, 2, 3, 4, 5, 6. We see that the average movement per week is actually $23, 875. So entry we said 300, take profit we said 290, stop loss we said 310. So this is $10 in between. And also I'm also going to set a certain target. Since I can see that I can make $100, but $100 in a week is not too great, right? Let's set a target of 500, or maybe even 700. Yeah. So the target is 700. The time length, we're analyzing weeks, and it kind of makes sense. So we're gonna keep it as 1 week. we could always adjust the time frame, we could always adjust the plan and make any necessary modifications to fit to our needs. But at the moment, I keep it very generic, procedural, for you guys to just understand the technique, and then you can make whatever changes you would like to make. It's important to know that when you're choosing the time frame, you're basically referring to an expected time frame to hold this position to get to the numbers that you wanted. For instance, if I would target 700 and I'm planning to hold it for 1 hour, yeah, and I'm planning this to happen in 1 hour, this is a little far-fetched. So this is why we use the indicator, and we have some measurement, and we're analyzing weeks. So it needs to be realistic, and it also needs to give us psychology-wise understanding that we're not, even if it doesn't get there in an hour, even if it doesn't get there in a day, I'm still not going to be worried because the analysis that we did here was weekly. Yeah, so this is also something to think about. The next thing we're going to jot down will be the movements, which is the price difference, between the entry onto the price that we selected. So we can see that the movement is actually $10 from entry to stop loss and take profit, and ATR equals 23,875, which is displayed in here, and it's based on 6 candles. There is a question from Mohammed. Can you explain better take profit and avoid loss? It's not exactly what I'm explaining, but I'll try. What take profit and stop loss are you doing, guys, is, as I wrote in the beginning, take profit, closing the position automatically with a profit, and stop loss, closing the position automatically with a loss. With this in mind, we understand that we can automate our entry. We can automate when the position, if it closes with the profit, where it will be closed, and also where it can be closed with a loss. This gives us the ability to walk away from the computer with a fully automated position and then come back to it in a week, or monitor it whenever we want. But this is a huge time saver. Okay, so what is the necessary units? How much coffee we need to sell to make $700 from $10 per unit? I want the people who are good in math to help me out and tell me how many units we need. This is also the equation we're going to mainly use, finding out the number of units we need, and it will be target divided by movements equals units. So 700 divided by 10 is how much? Who can tell me? I'm gonna give you guys 5 seconds to try and give me the right answer. Good job, Freddie. Shamila, very good. Okay, so we've got obviously everyone who wrote 70 is correct. Okay, we're gonna click here, enter 70, right? And that means that if in here we'll write 70, this should bring us to where, good job, Evan, that brings us to where we wanted. So we can see that we can make 700 or we can lose 700, which is great. It's not really great, we're gonna work with that, but at least it fits perfectly with what we wanted to achieve. So that is quite amazing. So we're gonna make it like this. Oh, sorry, 70. And here we are. Now, what do we think about the ratio of 1 to 1. Okay, and also, just a second, we're gonna put it like this. So 7% of our balance, and in here we're gonna do it the same 700 exposure of our balance. What does that means, guys? It means that, for instance, if I'm going to take another 5 positions, another 4 positions with the same ratio, we've got 700, right, times 5 equals 3,500. Yeah, profit or loss. It means that if I'll take another 4 positions, this part is a little more advanced. I'm going to tell you guys that the next 2 or 3 minutes are going to be much more advanced, just the next 2-3 minutes, because I'm going to explain about a nice technique to significantly improve your risk money management. Okay. Yeah, so when we're looking at the ratio of 1 to 1, and we'll be looking at 700, this 700 profit or loss times the diversification. Yeah, and this means that if all of my 5 positions are losing, I'm gonna lose this much. If they are all winning, I'm gonna make this much. But it doesn't allow me to compensate any of my positions with the difference of another winning position. So if, for instance, I'll cut this ratio to half, this means now that we've got 700 if all make profits, and we've got 350, for instance, if some of them, if only half of them make profits. Yeah, so what does that mean? It means if half of my position, 3 of my positions are profitable and 2 of them are in loss, I'm still gonna make progress. Yeah, I hope that it makes sense. So the ratio here of 1 to 1 is something that I might want to adjust. Now I'm gonna ask you guys, what is a reasonable exposure if not 7%? What is a better exposure than 7%? I know some likes 1%, some like 2%, 5%, some even take 7% as it is. But again, if we will multiply and take 5 positions, this 7 is not going to remain 7. Yeah, what will happen is, okay, and then we are 35% exposed. So this is something we need to acknowledge, and we need to choose a percentage that we're happy with to be exposed in the market to the favor of making the 700. Okay, what do you think that is a reasonable exposure, guys? All right, so Mateo, you wrote I go for no more than 2%. Okay, 2% is it's okay. Unfortunately, Mr. Bangani, the recording cannot be sent, as I said multiple times, but you can easily access the recording on our YouTube channel. On our YouTube channel, there is a lot of useful content. So we got Mr. Terez going for 6%. Okay, anyone else? What is better? I'm also going to say that the question here is actually a tricky question, because it's not necessarily better or worse than 7, right? I just want you guys to have the ability to adjust it in case you would want to. So what we're going to do is we're going to make the 7% 3.5. How are we going to do that? We're simply going to take the difference between the stop loss to the entry, which, if this is our stop loss and this is $10 away from the entry. What we're going to do is we're going to take this $10 and we're going to split it in half. Correct. Who wrote this? Retha, good job. Very good job. Yeah. Correct. So the 5 here means that instead of being $10 away, we can be only $5 away. And with $5 away, we are going to potentially lose half than the 700, which makes us, instead of 7%, it makes us 3.5. And the same thing we did with this 3.5, we could go and divide it for even, divide that by 2 also, or we're gonna, let's do it like this. We could divide it by 2 also again and make this 3.5 175% if we would want to, but keep in mind that you want the stop loss to be in a reasonable length from the entry. Otherwise, the stop loss, if it's too close, it might trigger and then go to where we want it. So we want the market to be able to maneuver in case it doesn't go directly to where we have planned. Also, a nice way to know your exposure from any amount as compared to your balance will be possible loss divided by balance times equals factor times 100 equals percentage exposure. I'll simplify it for you guys. 700 or maybe 350 divided by 10,000 equals factor. So the factor is 0.035 times 100 equals 3.5. Yeah. So this is a very nice, simple way to do that. And one last thing before we, by the way, are there any questions? Any questions about anything that I've explained so far from anyone? Okay, the question from Mateo. I've learned in a course that we don't trade in consolidation area. So what do you think about that? Look, at the end of the day, everyone doing his own analysis. Sometimes consolidations can be useful. Sometimes we want to be careful. That depends on the type of analysis we're doing. That depends on the momentum. I like to make comparison to previous levels and to choose my entry based on what I what I figured from here. And it's not okay if you learn it in a course. I don't know if that depends. That really depends. As you can see, consolidations area can be useful. Some traders don't trade. Okay. I don't really have an answer for that. So there is another question. Can you give us a live signal? No, absolutely not, Mr. Abinur. This is not one of the things that I can help you with. But unfortunately, guys, our time is up, and I hope that this was practical and useful for you guys to use in your strategy. You're all welcome to join us tomorrow with a live Q&A and ask whatever other questions you have. We'll have plenty of time to answer that. Until then, I wish you all have a fruitful week. Best of luck with trading, and have a good day.